Daniel.
No, it's fine. You're fine. Now we're live. We'll get into the show now. I'm with Veronica Avila. How do you spell your last name?
Platero.
Veronica Avila.
Platero.
Platero. I don't say Platero.
Platero.
Platero. That's what my mind was thinking. Platero. You know, the reason. Thanks for coming for the interview. I know it took a while. Technical difficulties, but I do want to bring all my friends out there that are watching on social media, LinkedIn, Facebook, and YouTube. Don't forget to subscribe to the channel. Veronica is, what are you, a manager at the primelending?
No, I am with primelending. And I am a manager.
primelending, sorry.
I am a manager.
Okay.
I'm the branch manager, and I'm also a senior loan officer.
Okay. There's a website, you guys. No, I'm just sharing the website of you guys. primelending. Is that the right website?
That is the correct website. Yes, it is. That is the correct website.
Okay, that's a website. You guys could find her, but her information is on here. And the reason I'm calling everybody for an interview, because due to COVID-19, there's a different stigma and what's going on the businesses. And you know, 1 minute into the show, if you guys have any questions, her number's on there, her email's on there. I'm gonna put her email as well. To let you guys know, you guys want to reach out to her on, because this week you and me were talking that FICO score for VA is low. Am I right? The FICO.
Well, it is. But with the COVID-19, all loan programs have tightened up. Whereas before COVID-19, the FICO score was as low as 600.
So and now it's changed.
Now we're at 640.
640. Okay, 640, and that's with the FHA or VA?
That's FHA and VA.
Okay. So all you veterans are listening to me. Go ahead.
Okay, I was just gonna give you a little bit of background.
Mm-hmm.
And I apologize. I am hearing myself here, so it's throwing me off a little bit.
Okay.
But I've been a mortgage banker now for 35 years. I've honed my skills in Orange County. I was actually head of an underwriting department for Wells Fargo. I did that for 15 years. So I'm a VA automatic underwriter and DE underwriter for FHA. So when I moved back to Imperial County, is when I started doing loans. And in my 35-year career, I have weathered through OPEC, the oil crisis in the late 70s. The S&L crisis, which is the junk bonds in the 80s. Also went through the dot-comer. And most recently, prior to the COVID, it was the housing market. The crash. So I've been through five different waves.
Oh my gosh.
Yeah. So this doesn't scare me. And everything always rebounds. The American dream triumphs. Everyone's buying homes. Just to give you an idea, I entered the mortgage banking industry when the rates were 16%. That's 16%. And so today, we're in the low. That's 16%. And so today, we're in the low fours, high threes. High threes. So it doesn't scare me, and when people panic, I'm like, no. So it doesn't scare me, and when people panic, I'm like, no. I've lived through Reaganomics. We'll be just fine. We'll be just fine.
Yeah, because I remember the 2008, I was working for Capital something Calexico at the time. I was a loan officer at the time. At the time, we had to have a DRE license at the time. And now you have to now since, was it the 2008 crash? And I remember we had to get that license, and we're like, what?
It's a different world. It's a different world back then. It's a different world back then. Everybody was doing loans. I mean, everybody was doing loans. I mean, I'm trying to slide it, but it was a, stated income. No questions asked. No questions asked. Everybody was getting a loan. Everybody was getting a loan. They were jumping on the bandwagon. They were jumping on the bandwagon. Today, it's a different world. It's a different world. You have to have skin in the game. You have to have a FICO score that's acceptable. Your ratios are tight. And you can't have any risk layers. So they're never going to let it happen again. So that one of the things about the COVID is that we're very clear that the government is not bailing out the banks or the mortgage lenders. So they basically have told us tighten up your guidelines. Make sure that you only lend to those that are low risk. And the other thing is that we're having to check their income, their employment, at least 3 to 5 times throughout the transaction. And that is to avoid fraud.
Like 2008.
Well, I hate to say this, but stated loans we refer to them as liars loans.
Yeah, and I know we came
It is
from
what
that.
it is.
Yeah, I know we came from on that because it was crazy back in those days when I did it. Yeah, things change and people change and economics change, and you went through already 5 in your life, so that tells you you've been through good and the bad.
I've been through, like I said, 35 years experience. And 15 in corporate, 15 on the fields. And I have to say that the scariest one was the stated income. That's when Wall Street got regulated, and 80/20s became the norm. And that was the scariest. I remember because I always was accustomed to doing loans. I always had to ask everything for everything. And I probably even had a blood sample at the time.
Oh my God. DNA.
To go into DNA, and then all of a sudden we were just asking for your first and last name, and if you were breathing, and carry on.
Yeah, carry on. And shows your income, and that was it. And
did not even show us your income. Just tell us what you think. Just tell us what you think you needed to make. So that, can you hear me? I'm sorry, I think I lost you. So anyway,
just didn't
so for me, this isn't scary. This is just going back to basics. And I have to tell you, they're still out there. Nobody's scared. I have to tell you that probably right as soon as we went on the lockdown, I probably had my best months. We have so many contracts. People are pre-qualifying like crazy. They're getting into homes. We just don't have enough inventory. COVID has not scared your home buyer. With technology and virtual open houses, the realtors are doing an amazing job. And the borrowers are scanning in their information. We're doing phone consultations. At least at Prime Lending, my staff and I. Actually, my voice is so scratchy because I literally do probably about 12 phone consultations a day. probably about 12 phone consultations a day. People are
you're busy then,
we're
like me.
busy, and every program is still available.
Yeah,
every program.
And this virtual world is different because
available. Every program.
which is good. That means we still have work to do to continue.
Oh yeah, and I have to tell you, I mean the borrowers are qualifying, and I have to tell you, I mean the borrowers are qualifying and they're fighting over these houses. The programs are still there for now. The programs are still there for now. So when client tells me, well, I think I'm going to wait. So when client tells me, well, I think I'm going to wait. My question is for what? What are you waiting for? You know, and they're like, my question is for what? What are you waiting for? You know, and they're like, well, I don't want to come in with anything. Well, you know, in the real world, I don't want to come in with anything. Well, you know, in the real world, you're going to have some skin in the game, period. You're going to have some skin in the game, period. And
yeah, and that's what I was having before when I got into going back to the credit repair business, because people are like, no, I can't, you know, I'm afraid. Hello, you want to clean your credit for a new house, or you just want to be in the same old dig hole, you know? But my clients are not from California. They're all from, one's from Idaho, one's from Texas, and they're all around the country because thanks to virtual internet, you know, they're around the country, and they're looking. And one is a young Marine. He's fixing his life. He goes, dude, I need to fix my life due to my divorce. And he's a manager, and his FICO went down. But I said, as soon as you get your FICOs up, he's ready to buy a house in Texas. And then the other one is in Idaho.
I'm sorry I did interrupt you, but when it comes to the credit, it takes a while to repair it and get it to where you need to be, and it can decline in an instant.
Oh yeah.
Yeah, something as silly as a $10 monthly payment that you just thought was not important, and it was probably the most important thing that brought down your FICO score.
You see, now you said that, it's true, because people are like, no, I gotta check my credit constantly. I go, every time you check it, it's gonna go down. But the regulators out there don't tell you that. But I've been behind channels on discussion on that, and we were discussing that people are not checking their credit like they want to. Now they want to check their credit because they want to buy a house now, because they saw the FICO scores down with you guys. And they're seeing the FICO score because they want to get a new credit card. They want to upgrade their lifestyle, but they don't see that every time they don't pay that $10, whatever they're trying to purchase, and don't pay that, it's called, was it late payments? It goes on your FICO score. They don't see it like that. Those late payments are going to pop up on your FICO score. Yeah.
Well, and that's the problem. The problem is that we look at their responsibility. And if you don't take that seriously, how are we going to? You're asking us to lend you $200,000 to $300,000, and you can't make a $10 monthly payment. You know, and I was serious when I wrote one time on my Facebook when I said, I've heard it all. The dog ate the check. It doesn't matter. You know, it all comes down to what is the FICO score? What is your credit history? What are you spending your money on? We look at bank statements and we see that they're eating out, they're out playing, and they're not making their payments. So credit is very important. It is king. It is the leader indicator of whether or not they can get any kind of assistance, what kind of rate they're going to get, how much we're going to lend them. It is king and its rules.
My other question: have you helped veterans lately?
I do. I'm a VA automatic, so I used to be the head of underwriting. I love VA loans because I'm a patriot. I believe if they fight for our country, they should have the American dream. Yeah. And so they're probably the easiest loan to get into. I mean, it's really simple. It's a VA loan. You have to have your certificate of eligibility. But if you use it and you foreclose on it is gone forever. If you foreclose on a VA loan, it is gone forever. And we had a few of those. If you foreclose on a VA loan, it is gone forever.
Yeah, because I was hearing this loan
and we had a few of those from 2009.
Oh my gosh. So they screwed up then.
Yeah, because they pretty much gave them 100% financing and they used up their eligibility. Yeah, because they pretty much gave them 100% financing and they used up their eligibility.
Yeah, because I'm hearing through the grapevine on LinkedIn, there was this loan officer in LA. She's saying godular. I never heard that word in the loan business. Godular. I don't know. Means that if you foreclose, not foreclose, but you don't pay your premium in time, you can't get another loan. Something like that. She was saying last night online. And that was my question for you. What's that term, or what's that?
Well, what she's probably talking about is forbearance. What she's probably talking about is forbearance.
There it is.
Yeah, pretty much what we have been told in the last couple of weeks. What we have been told in the last couple of weeks, that if a borrower has a loan, a home loan right now. If a borrower has a loan, a home loan right now. Doesn't matter if it's conventional FHA or VA, USDA. Doesn't matter if it's conventional FHA or VA, USDA. And if they even call their servicer. And if they even call their servicer about skipping a payment or two. About not skipping a payment or two. That is asking for forbearance. So they are automatically. Kind of blacklisted. And we're to stop the loans and not do any purchases or refinance. Because they've already pretty much said. I don't think I can make my payment. Even if they were just looking for a loophole, they're going to get spanked.
That's crazy.
Yeah, because the government, everyone's tired of it. They're like, you can make your payment. Don't try to look for a loophole. Don't try to, unless, there's people out there that really need it. And that's what it's for. Not those that just want to skip a payment so that I can, fix my patio or, I don't know, do something silly versus paying my house payment. And they're going to catch that. Because they're going to ask for bank statements, they're going to ask for pay stubs, they're going to ask for their lifestyle. And if they could have made the payment, it's going to be clear on paper.
And my other question, Veronica, have you, even since the COVID-19 hasn't stopped none of us, but have you seen a drop on foreclosures or any foreclosures? Like you said, there's no inventory in Imperial County. You come from Orange County. I'm pretty sure there's inventory in Orange County, but not in Imperial County. Why is there no inventory in Imperial County? Why is there?
Well, first of all, we don't have a lot of building going on. Only in Imperial and in Brawley. And second of all, I think people learned from the last wave, and they're holding on tight. A lot of people are saying to me, well, I'm just going to wait because after the COVID, prices are going to go down and there's going to be foreclosures, etc. Not going to happen. Prices are holding firm and strong. There are a lot of buyers out there, multiple offers. And so we don't see it. We really believe that the 2009 crash pretty much taught a lot of people not to walk away from the responsibility because they're not going to get a second chance.
Cool.
It cost them a lot of money. It really did. And so we don't foresee a lot of foreclosures.
Okay.
Any foreclosures that are going to happen are going to be truly the borrower just could not keep up.
And you hit the nail on the bottom there. The bar just can't keep up because I'm hearing no rent, no let the government. This is out in LA. I'm looking at in Sacramento.
Yeah.
Those areas in other states in the country that are hearing. I'm hearing no, I'm not going to pay my rent too. This is over. The government's going to take care of us. But it goes on a backbone with you guys because you guys are the lenders, the hard money. So and it's true. They're good. That you're telling me the good guidelines that are out there because they don't see the guidelines out there. They think it's we're playing out there.
Because I call it coworker 101 and neighbor 101. They're listening to the peanut gallery, so they don't really get it. So the bottom line is this: there is no more hard money. Everything is above board, fixed rate. You gotta definitely qualify for that home loan. everything is above board, fixed rate. You gotta definitely qualify for that home loan.
And the homes here are what, 186?
Oh no,
that I'm seeing online.
No, it doesn't matter where you're buying. You don't find anything.
House?
No, the average home, the average entry level. Doesn't matter where you're buying. You don't find anything. No, the average home, the average entry level home in Imperial Valley, 240 to 260.
Yeah, where the prices are going
240 to 260. Yeah. I mean, you're not going to find anything under 200.
Yeah.
That's. I mean, you're not going to find anything under 200. That the borrower's going to find like this is this is what I'm looking for. No way. That the borrower's going to find like this is this is what I'm looking for. No way.
And that score has to be what, 700?
No.
The FICO score?
No.
Okay.
The minimum score
For
is
that
6.
house?
No. The minimum score is 640. The minimum score is 6. The minimum score is 640.
Okay. Just for any loan.
But just because, you see, this is the misconception.
For any loan.
But just because, you see, this is the misconception. A lot of people think like, all I need is 640. You could still be declined. A lot of people think like, all I need is 640. You could still be declined because you can have a 640 FICO score, but it could be because you can have a 640 FICO score, but it could be false. It could be false. It could have late pays, a collection. It could have late pays, a collection. And the underwriting engine picks that up. And so it will decline the file. I can have two borrowers that one has 6. Well, they both may have 640. One will get approved and the other one won't. Because the profile, it's one may have 640 with no late but has minimal credit. The other one may have 640 with several lates and collections. So that's a risk. The other one may have strong job stability with good ratios, and maybe a little bit of money in the bank. So that loan will get approved over the other one. So there's no two same loans. And therefore, when a coworker starts talking to someone at work and starts telling them what these are the rules, I'm like, I gotta like completely readjust the mindset.
Yeah, and I get you because I've been talking to tiny house lenders up in Oregon and up in Washington area state where tiny houses is available, and the lender's like, well, it's 30,000 for the loan, the other one's 60,000. I'm like, oh, but I didn't see the lenders he was talking about because he didn't give me more information on the lenders. But I'm pretty sure they have their lenders and you guys have your lenders, so or else they use you guys as well.
I'm approved in all 50 states to do loans, but I stick to California, Nevada, and Arizona.
Okay, so my friends in Nevada, you guys heard her. She's in Nevada. So those people that left the valley are in Vegas, contact her. Where else you're at?
But the housing market is different everywhere.
Oh yeah, I'm pretty sure. In different states.
Specifically speaking, here in Imperial Valley, your average entry home is 240 to 260, and your average millennial is buying 300 to 340. And that's a true story. And I'm telling you, we have a strong presence of law enforcement, educators. We have people in the medical field. And they're buying.
Cool. It's good to know that. I wish it's true. Law enforcement, nurses, teachers, and county employees are probably buying. And that I truly see that because I've seen their profiles and they're buying, and then they're coming from San Diego. They're coming from other parts of the country to live down here and work down here. And I run into a few of them online, and they reach out to me as well. So. I know what you're saying. I seen it with my own eyes as a journalist, and as now credit repair. I'm just seeing that they're finally waking up and smelling the coffee. The millenniums.
Well, credit is very important, and I think what happened is the misconception was back in early 2000 when the stated income loans were coming in. The FICO score was as low as 580, and no one cared about whether they had thousands of dollars in collections. when the stated income, and no one cared about whether they had thousands of dollars in collections. And that is not true today. Today they care.
And who's those you're saying referring to?
I'm sorry, what was that? No, what I'm saying is back in the last house. No, what I'm saying is back in the last house in 2006. From 2001 to 2006, during the stated income, everybody, the FICO scores were 580. Stated income, nobody cared if they had collections. The FICO scores were 580. Stated income, nobody cared if they had collections.
Okay.
Loans were being done over and over. You were doing loans. Loans were being done over and over. You were doing loans. Everybody was doing loans. And today, I'm going to be honest. I have loan officers that tell me I was doing loans back in the day, but they're not doing them today. And they try to tell me the guidelines, and I look at them like you never even knew the guidelines. That doesn't exist, because that doesn't exist, and we're in a whole different world today. We're in the back of the 70s when you had to come in with money and have skin in the game.
And I see that. I mean, I'm seeing that what's going on in the Silicon Valley. I have family up in the Silicon Valley that's growing up there, and they got all kinds of inventory in Silicon Valley. They got land in up in Tacoma, Washington, for example. Have colleagues that live up there, and they're telling me, dude, there's land over here. There's inventory to build houses here in Tacoma, Washington. So yeah, I mean, everybody has to have skin in the game, has to know their I's and T's crossed. What we learned when I was in the industry at the time. Have your I's and T's crossed. Now you gotta have your I's and T's crossed. More debt now. You know what's the regulations are.
Now that the economy is taking a little bit of a dive, but took a dive. Buying homes is going to tighten up, even tighter.
Cool. So we're almost 30 minutes into
the first thing I do. When a client wants to talk to me, I have to see the credit. Because the credit rules and it dictates everything. If the credit isn't desirable, there's nothing to really talk about.
You guys heard that? The expert just said it. She just said it. Those are ask me questions this week. There, she has said the word. She has said the keyword that I needed to hear today. Yeah, it's true.
Well, there's three things that we look at. Credit, assets, and income. The money's not the number one thing. Credit and income is. And if the credit does not meet the threshold, it's back to the drawing board.
You heard it, you guys. There it is. There's your answer, you guys. If I've asked me this week, there's your answer. So those are on Facebook. Have questions, text her. Her number's there. Her email's there. Have any questions, reach out to her. We're in 3 different states. You're in Arizona too, so.
And for VA, we at primelending do waive all the lender fees up to $2,000. That's a big savings.
Okay, all my veteran friends, you just heard what she just said. Say that again.
We waive all our lender fees.
They're veterans friends. You guys are listening. I know you guys are listening. From El Central to Sacramento to we're all mad on social media.
I could do all their loans.
She just said that. She said another keyword that I was been told today, this week.
And I'm sure there's prime lending offices in their area.
Oh yeah.
And they could just reach out to them as well.
But
it is a corporate. It's a company-wide to waive the fees.
Yeah. And which is good. They're waiving the fees to our veterans. You know. Because I know veterans are looking for houses or want to move from California to another state. That's what I'm hearing too. So a lot of our veterans are moving out of state too.
Let me demystify a myth. There's a lot of veterans, or there's a lot of people that and they'll say to me, I shouldn't have to come in with any money. And they'll say, I shouldn't have to down. Come in with any money. It's $0 down or $1 down. That's not true. That's not true. VA gives you 100% financing of the sales price of the home. VA gives you 100% financing of the sales price of the home. That's your 100% financing. That's your 100% financing. You still have to come in with closing costs. You still have to come in with closing costs. Closing costs can be anywhere from $7,000 to $8,000. Closing costs can be anywhere from $7,000 to $8,000, depending on the sales price.
Mm-hmm.
And that is the responsibility of the veteran. Now the seller can pay up to 4% of the closing cost. But that's the seller's choice.
Cool.
But that's the seller's choice. So for all those veterans out there, you do get 100% financing of the sales price, but you still have to pay closing costs. That's why us waiving the $2,000 is huge.
Cool. So how you been working, through your office or home, or you just been working since this thing happened?
Actually, we went on lockdown. My staff is all working from home. And so am I. And we're fighting for office time because we're social distancing. So we kind of have a little schedule. And a little shift going on. But and what I normally do is I take the last shift. So I'll go in from like 3 to 9 o'clock at night.
Which is okay. That's cool.
Yeah, I have my girls going in early. They'll go in for 2 or 3 hours just to kind of feel, get caught up, and then they go home and work, and then. So we've been doing really well. We actually like it.
The schedule time.
Yeah.
Well, thanks, Veronica. We're 32 minutes into the hour. I want to thank you for, even though we had technical difficulties, but all my veterans, you got your answers question, and the general public, you got your questions answered as well. Those that have been inboxing me. We'll be interviewing pretty soon. Waiting for the mayor and the board of supervisors to give me some more details. So that's coming later down the show this week. I'm just waiting for their response. I'll be interviewing them, and I'll also be interviewing a barber pretty soon this week. He's not too happy. A barber, local owner in town. So I'm just letting you guys know that these are just skits that are happening through my week. So I'm just waiting for the okays for the interview, like what I just did with Veronica, because Veronica is so busy. I know she's busy. She's always on Facebook, but she's busy. And but yeah, reach out to Veronica. And anything last word you want to say to anybody out there, Veronica?
I feel so horrible. You're calling me Veronica. Call me Ronnie. We're friends now. Call me Ronnie. I go by Ronnie.
Ronnie.
Yeah. And though I'm on Facebook, I have to say I have an amazing assistant who handles everything for me. She's amazing, and that's why we had technical difficulties, because she wasn't right by my side today. I'm lost without her.
But thank you, and those that have reached out to her and reach out to me. Any questions?
Go ahead, Daniel. Say Ronnie.
Ronnie. And now you can see her at church, but when church opens,
I don't bite.
You'll see Ronnie in church. Our Lady. Every time I reach out to her, she's at church. I reach out to her when she's at church. So.
I do. I like St. Mary's and Our Lady of Guadalupe.
Yeah, when you did that one time thing, I reached out to you and I was gonna go do an interview, but I'm like, nah, it's kind of dark, and I'm in the east side too, so I'll skip that interview. It was too dark, and it was a block away. I live a block away from Our Lady where I live. So.
Were you scared of the kukui?
Yeah.
Were you scared of the kukui?
No, I was scared of the guys that just don't know who's gonna pop up. Sometimes I'll be walking around the neighborhood and
We're all at home quarantine right now.
Yeah, they just pop up out of nowhere. You're like, oh crap! You're in your little mode, and it's like, hey dudes, what did I do? But yeah,
this has been
but
fun.
thanks.
I hope you invite me back. I hope you invite me back. I hope I didn't do too bad. I stumbled because I kept hearing echoes on my headphones.
Yeah.
But I kind of figured out now how to keep going.
No, it's awesome. Well, I'll be interviewing you soon as soon as I get the feedback from our local mayor, Val Central, and the board supervisor, Louis Placate. Reaching out to him as well because people are worried when's the reopening gonna happen. So that's the feed I'm getting now, and then I get a business owner that's gonna sue the state and local. So he's on the urge as too. I got that inbox this morning, so I'm just like trying to interview as much as people as I can through Pure Valley / to the state or nationwide. And these are quick. So you answered the questions I needed to be answered, and you answered them.
Yeah.
But her numbers
as the housing market is very strong.
There it is.
And there's plenty of buyers out there. And don't be waiting for the prices to drop because they're not going to drop.
There, you heard it. So, thank you. And there's a website. There's her number, and it's going on since I've been talking to her. So, thank you guys for reaching out.
Thank you, Daniel, for having me on. This
Ronnie,
is not something that I'm used to,
soon.
but I like it. Thank you, Daniel, for having me on. All right.
Good night.
Good night. Good night.